Welcome, ladies and gentlemen. Vancouver Resource Investment Conference here, day one. And yeah, I'm already moving now on with my uranium interview series here. And with me now is David Cates, the CEO of Denison Mines. And we are at the booth here. And very good morning.
Yes, of course. Thanks very much. It's a very busy show.
It is. It's crazy what's going on here. I really like that. And especially in that, new decade, which is the decade of commodities, I would call. And,
well, clean commodities, let's hope.
Absolutely.
Yeah.
And that's what you are doing here, uranium. Yeah, uranium is, I would say, the future of energy generation still, for sure, because it's the base load. And we spoke the last time, it was in Toronto, I think, at PDIC. Since then, a lot of good things happened. Maybe you can remind us a little bit.
Oh my goodness, 2019, unbelievably busy year for Denison. We've spent the year focused on our ISR mining program at our Phoenix deposit on the Wheeler River project. And you'll remember that about 2 years ago, we put out a pre-feasibility study for this project, and we've now got the potential to have the lowest cost uranium mine in the world by taking very low cost ISR mining and bringing it to a very high grade deposit at Phoenix. And so 2019, we spent focusing on technical de-risking and going after our number one technical risk, which was permeability of the ore body. And literally multi-month program, multi-million-dollar program,
of course, it always
drilling many wells into the ground at Phoenix. And really all I can say is that it exceeded our own expectations in terms of the results so far. We've really been able to prove that we can move water and that there are hydraulic connections between wells within our deposit. And that was really the number one technical risk, is can we move mining solution through the ore body? You need to do that if you're going to use ISR mining.
Absolutely. Yeah, and you finally succeeded, right?
Well, we've got much work to do, but in terms of
the
biggest thing that matters for this, you know, we've really conquered it head on, and you'll see us do more work on this, but this is a tick that says, you know what, ISR mining, it does look like it's amenable to a deposit like this in the Athabasca Basin.
That's right. Okay, when we talk about uranium mining, I mean, we saw in the last 2-3 years a lot of good developments because shrinking supply. Demand is still rising, of course, because we are building more and more nuclear power plants. Then we saw the tendency in the US, where there's still no solution so far. But I would say the market is moving on. Despite, I'd say, it doesn't matter what they decide, yes or no or whatever. What is your view on the market here? What is your view on uranium itself?
Well, uranium right now is a very interesting commodity because it's like an undercurrent, if you will, right? On the surface, the water looks still. It doesn't look like there's much going on with the uranium price. And in the sector, some people are getting bored. Maybe it has like a little bit of a lazy river type look. But underneath it, we have a very active undercurrent. And the things that you're talking about are the moves in the market that are just starting to lay the groundwork for a very dramatic change in our space. And it's going unnoticed. And that's why I'd use the analogy of an undercurrent. You don't know that it's there. But we've seen supply curtailment. The world's largest, highest grade uranium mine's been shut now for several years. No reopening in sight unless the price changes.
Also, no new projects, right?
Projects, other than the rare exception, maybe like a Phoenix, you know, where you can compete even if the market doesn't change. You know, the rest of the projects can't say that, and they're not really moving forward. And so we're seeing the supply side really respond and be challenged in terms of its ability to react, right? MacArthur will turn back on, but by that time we'll need other assets to have come on. The demand side, we've seen what was a negative story in many jurisdictions on demand. If we go back 3 years ago, vector positive, right? And we're also seeing on a much bigger picture level attention to what nuclear energy really is and how it fits in with clean energy and renewables, right? Seeing that, you know what, renewables have done very well and they're an important part of the future, but they aren't going to power everything, especially if we have electrification on automobiles and everything else take over. We need large-scale power sources. And the choice is, do you go with nuclear, where you produce no emissions, or do you go and burn fossil fuels and more of it? And so that realization is coming through as well, that nuclear actually is part of the solution with solar and wind. It's not on the outside looking in. All of that stuff is happening underneath, and yet because of that trade tension in the U.S., the market looks calm, quiet, boring, because the buyers, the players, they're afraid to get in because they don't know what's going to come out of the trade tension in the U.S.
But why they are afraid? I mean, this is a question almost nobody could answer me because I don't get it. Nuclear, let's call it uranium, is like 3 to 4% of the total cost of a nuclear power plant. So if I have the chance to buy it, let's say now, for the next 5, 7, 10 years, when I know what the market looks like, I don't get that.
No, look, that's totally reasonable, right, to say that. You've got to drill down a little bit to understand the behavior in the space. And you've got nuclear utilities, and many of them in the United States. Even though China's growing, the U.S. is the largest market for nuclear power in the world still. And there are many buyers there. And they really do drive the market to some extent. And they're looking at this saying, I don't know what my cost is going to be on the uranium tomorrow because I don't know what the administration is going to do with these trade petitions or the Nuclear Fuel Working Group or sanctions with Iran. And they say, well, look, I don't know where to buy my uranium from. Because I think it's going to be this price, but if this happens, then it's actually going to be that price. And they are cost conscious. You're right, big picture, they should be buying all the uranium they can. But they're managing multiple power plants, different types of power, and they're trying to be competitive within their own company and their group. And so they're often saying, look, why should I pay more for the uranium when it seems to be available at this price? But if they all think that uranium that's in the market, the sort of oversupply today, they can't all have it. And that's when the space gets very interesting, is when they all try to go and get that material, they realize it's not there and more is not readily available behind it, and the price moves rapidly.
Well, it reminds me of 2007, to be honest.
Well, look,
same situation.
I mean, we
all of a sudden they started, right?
Right. We had the closure of MacArthur, and that's got people thinking, and really that should still have them thinking, but they've been distracted. By these other trade risks to say, you know what, I guess I'm going to wait and see how it goes. And look, they have inventories. They have them for this type of reason. They won't last forever.
That's right. When do you expect a decision there? Can we say something on that?
Well, that's part of the that's part of the difficulty, right? Is a decision was supposed to be last year. A decision came, and a working group was appointed. That was supposed to be in the fall. It came and went. So, I mean, unfortunately, you don't know now. What I would say is that the space is paying for that. The equities are down, the commodities weak on this uncertainty. And what I see there is an opportunity to accumulate, because this is a small sector. And when it moves, it often moves fast. And people look back and say, well, I didn't really have a chance to accumulate enough. Here we've got a sort of uncertain timeline, but a very depressed space. And it's saying, look, if you can buy some of these stocks where they are today, you should buy them today, you should buy them tomorrow. You just keep buying a little bit and use this window of time to accumulate your position.
Absolutely. So 2020, the year has started. Most important development for you guys. What do you want to achieve this year?
Well, for Denison, it's really building on our success with Phoenix. We launched the environmental assessment and permitting process in 2019. That's front and center now in 2020. We got to keep moving that forward. That's a critical path for the project. And in parallel, we're going to keep de-risking those technical elements one at a time, systematically, and ultimately have sort of a breadcrumbs effect of positive news as the market comes to realize that using ISR mining in the Athabasca Basin is going to work and drive our value up rationally and stepwise as we go through that. So you're going to see a lot of test work, permitting news, and just a lot of blocking and tackling too in 2020 as we move the project forward.
Absolutely. Let's assume uranium really starts to move. How fast could you be in production time-wise?
Well, we're pretty much on the fast track now because the beauty is we don't need the uranium price to move. So
I know, but
for us,
it helps, of course, a lot.
Totally. It helps, I mean, in terms of access to capital, things like that. But for us, the path is the same. And really, it looks like end of 2020, we'd be submitting our most meaningful documents on the environmental assessment. Then it goes to the regulators. You look at timelines. I mean, is that 1, is that 2 years? We don't know. But the game is to be ready for when that is permitted to then have a feasibility study, make a development decision, and start building.
So that's 5 years?
Well, and you look at in our plans, 2024, 2025 for first production.
Wow. Okay, super. Well, that sounds great.
Great.
I think you're moving the path right along, and just keep us posted with good news, and let's see what comes out of the US finally.
Absolutely. Thanks very much.
David, thank you very much. Yeah, ladies and gentlemen, there was David Cates, the CEO of Denison Mines, and you heard at the market still a little bit crazy going on here because demand is going up, supply is shrinking, and we wait for a decision from the US that probably brings the buyers back into the market. Meanwhile, Denison is delivering, Denison is doing their work. Stay tuned, check out the company. Thanks for watching us. Bye-bye from Vancouver.